With all of the news we just experienced recently, we're on the verge of a digital gold rush, and now may be one of your last chances to get XRP at a discount, as the XRP ledger just activated its clawback feature, a move that could redefine digital asset security and compliance. This new function, which the CTO of Ripple, David Schwartz, just tweeted about, would essentially allow issuers to retrieve tokens from user wallets under certain conditions. Now, this is a very controversial tool that could either strengthen trust in the ecosystem or even raise concerns about its decentralization, as they can control assets. At the same time, the NYSE ARCA has officially filed to convert its Grayscale XRP Trust into an XRP spot ETF. And if this is approved, this would bring massive institutional capital into XRP, potentially mirroring Bitcoin and the ETF boom we saw earlier this year. But here's the catch. With XRP still in a long-running legal battle, which yes, many people believe is over and I believe was completely unwarranted, the reality is we still have this appeals process. So will regulators actually greenlight this move? So speaking of the regulatory battle with the SEC, there's a major shift over there, as acting SEC Chair Mark Uyeda is stepping in, and the crypto world is buzzing with speculation. Will he drop the Ripple lawsuit? Many believe this case was 100% politically driven from the start, including myself, and with a new chair in place, could we finally see a resolution that will 100% send XRP soaring? In other words, we have a perfect storm of tech innovation and regulatory clarity, which could shake the market in ways we simply haven't seen before. And already we're starting to see the price action reflect that, as XRP hit a recent all-time high of $3.40 on many exchanges, and XRP is at a critical turning point. In other words, what happens next could not only just impact you as an XRP holder, but the entire crypto industry. So by the end of this video, you'll know exactly what's coming, how it could impact your investments, and whether XRP is actually going to explode. Stick around, because this could be the moment that changes everything. And as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, Bull Runners. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PauliDeFi. It's been about 3 to 4 days since I've posted a video on the channel, and that's because the entire team was down in Las Vegas for our very first Altcoin Pro University Mastermind event, where about 50 people that are members showed up, and we had a really good time. Now that said, if you were there and I got the chance to meet you, I'm grateful that I did, and we are back in business, folks. I'm going to be making these videos daily. So that said, David Schwartz, or Joel Katz on X, is the CTO over at Twitter. Many of you know what he looks like. He is truly ultra nerd, and I would argue one of the best devs in the entire crypto space. And just recently, he made a statement saying woohoo to the fact that there is an AMM clawback. Now, an AMM is an automated market maker. It's basically an algorithm that allows for markets in crypto to be made when trading or swapping assets. And this amendment is now live on the mainnet, or the XRP ledger. But what exactly does a clawback mean, and how is that going to affect XRP? Now, with the launch of the RLUSD stablecoin and the fact that they will play ball with regulators and have a one-to-one backing, there need to be some rules of the road in place. In other words, there needs to be a clawback feature. Basically, what this allows for the XRPL to do is the fact that the Ripple's dollar-pegged stablecoin will be a clawback token, which can be floated and exchanged directly on the XRP ledger's DEX, or a decentralized exchange, enhancing its liquidity, or the amount of money that is available in that ecosystem, and its trading options, which will likely boost the DeFi activity on the network. However, the reason that you would create a feature like this is because it is necessary for regulatory compliance to recover assets in cases of fraud, illegal activities, or where tokens are sent to an unintended address. Now, here is the catch. The fact that in order for a clawback amendment to be activated, there needs to be a 90% approval from the validators on the XRPL. Now, if you go to double verify, you can see that there are about 1,025 nodes running on the XRPL and about 200 validators. Now, a validator is essential in maintaining security, integrity, and reaching consensus on the blockchain. So that said, of the 200 validators, we would need a total of 180 validators to agree in order for there to be a clawback. And that's usually going to be due to fraud or some unusual activities. Now, personally, do I love a feature like this? Well, everybody loves it when you go to a bank and let's say someone steals your credit card and then spends a bunch of money on it, only for you to be able to reach back out to your bank and then for them to refund you your capital. But in the world of DeFi, if I lose my money to some sort of a scammer because they get access to my private keys, or I sign a transaction online through a sketchy website that looks legit, at the end of the day, my money is gone completely. And that's essentially why a feature like this is valuable. However, on the flip side, it starts to echo of centralization, and many people in the crypto community don't love features like this. Personally, I don't mind it as long as the majority of validators have to agree, and I believe the majority of validators aren't completely hijacked by centralized authorities, and most of them probably aren't completely power hungry for the old way of things in finance. Now, if you were watching the charts recently over the weekend, markets crashed pretty heavily, and that would include virtually every cryptocurrency and every major stock in the United States economy. And that was on the news that DeepSeek, which is a Chinese AI, reported that their AI cost $6 million to train. And the fact that that was actually misleading. Now, the reason that this caused markets to crash is because many people believed that the current system or state of AI in the United States, which is considered the best, under companies like OpenAI and ChatGPT, spend hundreds of billions of dollars to get to these levels. And the fact that the entire state of markets is extremely or severely overvalued. When you have someone like DeepSeek coming in for $6 million and training a model, that's why markets crash. They said, did we spend too much to buy these companies at overvalued prices? Then it recently came out that they potentially had access to all sorts of chips that were illegal for China to get. And the fact that the total spending is actually estimated to be near $1 billion, which is still far cheaper than it is to run our models in the United States over at OpenAI and ChatGPT, which means the majority of AI is currently in a bubble and well overvalued. And that would include any company that began integrating AI into their entire infrastructure. But still, this actually created for a situation where people were able to breathe and the markets rallied right back up from a 15% dump. XRP went from about 313 down to 265 and then pumped all the way back up to 321. And this was over a period of a few days. Now, when you see a dump like this and then you see a rally or a V-shaped recovery, this is an indicator of strength and a lot of demand into these ranges from 280 down to 265. And if you remember my last video, I did make a mention of the fact that 284 would be my range of support and where I would like to buy. And so I actually had a few bids and buy orders into that range and went well below that range on a wick, and then it hit my buy target right down here at around 284. I started accumulating, and guess what? We're currently in the profit, not by much, but I'm glad I was able to buy on that dip, and I hope you took advantage of it too. Now, two extremely bullish pieces of news from Jerome Powell. The first is the fact that he just stated we don't need to wait for 2% inflation in order to cut interest rates. Now, depending on how you actually break this down, it could be both bullish and bearish. Many people right now might make it to be bullish. However, when you really think about what he's saying, he's basically stating that if interest rates remained as high as they did, and let's say the economy starts to crash, while inflation is sitting at like 3%. Well, then guess what they're going to do? We never reached that 2% target of inflation. However, we need to now lower interest rates in response to a collapsing economy. However, when someone reads it on the rip, it really just sounds like, hey, we don't need inflation to be 2% and we can cut whenever we want. And so maybe that is why markets rallied just slightly as late as January 29th and the 30th. But I think what really caused crypto markets to rally hard is the fact that Jerome Powell said that banks can now fully serve crypto customers. And this is the very first time he's mentioned crypto at all. Let's listen to what he said.
With Bitcoin really is to look at, with crypto really is to look at the banks. And we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that.
And so combine that news with the fact that the SEC is expected to potentially drop the Ripple case. However, it might not be under the acting chair, Mark Uyeda, but still there is a lot of speculation considering recent developments suggest that the resolution of this case could be closer than expected. And that's because many people have seen that Brad Garlinghouse has had direct discussions with President Donald Trump, and he even stated this directly on a live spaces with X, to which Sherry, a well-known expert in the XRP community, said that the SEC didn't move the case. It's actually been concluded already and is now listed under award claims. Once the case was appealed, it received a new case number and can be found on the Court of Appeals website. But still, it may not be over completely until April, as it would be unusual for an acting chair, in other words, Mark Uyeda, who is not meant to be the SEC chairman. He's just acting in place of until Atkins is likely confirmed by the Senate around April. In other words, these big cases are typically dealt with by the actual chairman, which we do not have seating in that seat yet. But companies aren't waiting, considering Trump seems to be doing everything he said he would do, signing more and more executive orders by the day and fulfilling promises that he made on the campaign trail. He's on a scorched earth path to change the way Washington operates, and people are beginning to believe that he's truly going to make America the crypto capital of the world. And so that's why companies like Grayscale, which sits right behind BlackRock in terms of its total Bitcoin holdings, is now aiming to take its XRP trust and convert it into a spot ETF, which would be far more bullish because that means the fees are going to be lower. And it also means they actually have to buy the spot underlying asset, or XRP, off exchanges, off people like me and you, which will create a lot of demand. And then they have to custodian it and hold it. And every single time they sell a position or a stock of that spot ETF, it's going to create more and more demand. This is also going to give institutional players a lot more access to something like XRP in a regulated manner. And so already XRP's 50% increase in January outpaced the broader cryptocurrency market. And now this is boosting investors' bullish confidence in the altcoin, whereas at Solana and XRP currently have the most spot ETF filings, sitting at 6 each so far and far outpacing the market, which leads me to believe it's virtually impossible for a player or an asset like XRP not to get a spot ETF. And so I believe that it will continue to pump into that news. In other words, buy the rumor, sell the news. Right now, this is rumor. Nobody knows if it's actually going to occur. But that said, major institutional players are so confident they're taking the time to file for these spot ETFs because they know when a BlackRock goes in, they're extremely likely to get approved, and then so will everyone else. The price will fly, and many people will make a lot of money on XRP. In our final piece of news, Visa and Mastercard recently lost a major class action lawsuit because they were essentially in violation of antitrust laws. In other words, they were operating a monopoly because they own 80+% of the credit and debit card market. Most people either hold or use a Visa and Mastercard, and they basically were charging merchants or small businesses premiums in order for people like me and you to swipe our debit cards at businesses. So if you were in business between the years of 2004 all the way up to January 25th of 2019, then you can get access to a $5.6 billion settlement where they lost, but you actually have to file the claim. And that's one of those pesky clauses that they added in there to make it difficult, because you're not just going to get a check in the mail, but you're going to get anywhere between 1 to 1.5% back on all of your transactions. And that's even if you're currently bankrupt or no longer operating that business. If your business was in business between 2004 up to 2019, then you can get some free money back. And the deadline is February 4th of 2025. And yes, this is completely free money that is sitting on the table, but when it hits the deadline, you might not be able to get any of that money. Now, just as a heads up, we did blur these names out, but these are clients that we've currently helped get money back in this class action lawsuit with Visa and Mastercard. This person did a gross credit card volume of $2.36 million over the course of those years and is getting back $29,000. This other person is getting $23,000 back for doing $2.1 million in credit card volume. Another person getting $1,300 back they didn't even know they had, because their business during those years did $139,000 in volume or processed that amount of money through Visas and Mastercards. And the list goes on. We can swipe all day. But if you don't file by February 4th, you will not get it, because that is the deadline. So all you have to do is click on the link below in the description to see if you qualify. It takes no more than about a minute or two to fill out the form when you scroll to the bottom of this page. And then you will see if you're eligible to get any money back whatsoever. Anywho, that's it for the video, folks. Thanks so much for watching. If you enjoyed the video, be sure to subscribe and like the video. It helps the channel out. And also be sure to go to bullrunners.com if you want to get access to Altcoin Pro University and check out what that's all about and how we can essentially help you to reach your goals in crypto this year, because 2025 we're in for some major pumps and you might just miss them. You might just miss some of the alpha we share inside our Altcoin Pro University. In other words, if you type in bullrunners.com and from there you land on this page and watch this 26-minute video for everything you get on the other side, it is truly life-changing and valuable. And all you have to do is ask the community. We have over 1,200 paying members, which means they're very serious about being here and learning, and the alpha is unreal. So thanks so much for watching the video. I'll look forward to seeing you in the next video, my friend. Goodbye.